All right. Good day, Xero partners. And today I'd like to share with you something about using Xero. So with me is Clemens Yeo, who is a partner consultant for Asia. So we are going to talk about, this is a short video, we're going to talk about how a non-trade and a trade creditors would work and how you can actually, it's a step-by-step walkthrough in a very short video. So with that, let me pass the time to Clemens. Over to you, Clemens.
Right, thanks, Rennie. Okay, so Xero does a very good job in terms of segregating the business functions and the accounting functions in Xero, because we want to make things simple for our business owners when they are using Xero to do their day-to-day business. And sometimes us as accountants, we are not able to see what this means in terms of the double entries or the accounting side aspects of it. Okay, so today, what I'll be covering is what using our Xero modules, namely the bills to pay as well as the invoicing functions, what they mean in terms of the accounting side of things. Okay, so let's begin. Now, the reason when you raise a bill, what happens in Xero is that we actually fix the double entries for you on one aspect. So for the bill side, which is the accounts payable, we fix up the credit accounts payable for you. And when you choose the account in Xero, you're actually choosing which expense this pertains to. So when this happens and you have a non-trade invoice that comes in from one of your creditors, you will be selecting, for example, office expense. Okay, and then the credit is already fixed there for you, accounts payable. Okay, and then here comes the next question, which is how do I account for non-trade non-trade payables, right? Okay, and the solution to this is to raise a credit note. And what happens as end result of this will be this trial balance as you'll see here. Okay, so initially when the entry comes in, when you choose, for example, office expenses, okay, it can be anything else. So just a little drop down to show you guys here. Maybe an audit fee, maybe general expenses. Okay, so if I choose general expenses, then of course my final trial balance amount will be the debit of the general expenses in whatever amount it is, as represented by this triple X here. Okay, credit accounts payable, so that is fixed, like I've already mentioned a few times. Now, how do we pass this entry to account for the non-trade creditors which may occur during our business? Because of course, not all our business will pertain to our trade functions, right? Okay, now the solution to this is to create a credit note. Okay, when you create a credit note, the inverse of the bills to pay will occur. Okay, meaning now the credit note, it fixes in debit accounts payable. So you're removing the accounts payable from your initial entry, which is crediting AP, right? Okay, and then you'll be choosing the inverse of whatever the other side of the entry is. So in this case, right, what do I want to account for this non-trade as? In this case, I've selected non-trade creditors. It can be anything else. So let's say you have accruals or audit fees, accrued audit fees, for example. You'll be choosing that. Okay, and then the end result in terms of obtaining your trial balance will be, as I've showed here again, either non-trade or whatever other account it may pertain to be. So maybe you have intercompany. So that's one very common thing that occurs in our Xero partners. So let's say you have intercompany payables, you can put it this way, and then the end result will be this trial balance. Okay, let me jump over into Xero to show you guys what the end result is also as a result of my accounting side of things. So let's say I have a rent that I received from my landlord, and I wanted to account for it as a rent expense. Okay, so I raised a bill payable, and then this accounts for the expense side of things. As you recall just now, I already debit my expense and I credited my AP. And then when I raise the credit note, I will then be passing the credit side into my non-trade creditors. As you can see, my non-trade creditors account here. Okay, GST, of course, this is an automated function that Xero has. It helps me to apportion the GST into this liability account. Okay, and you notice my AP is now gone already. Okay, so in other words, I effectively eliminated the accounts payable and transferred the balance into my non-trade creditors. Okay, now comes one more question, is that normally when you do this step, I'll recommend to always generate the accounts payable aging first. So the AP aging, get it out first before you do any year-end reclassifications in terms of this non-trade credit note that you're raising for all of these non-trade suppliers that you may have. Okay, because you want to keep track of your aging for different invoices, be it trade or non-trade. Then you can do this reclassification. And of course, one thing I neglected to mention is that you want to do it this way because manual journals in Xero, you cannot hit the AP. Okay, and that's why this is kind of a workaround in terms of accounting for all of these non-trade creditors which you may have. Okay, I hope this was informative. Let me hand it back to Lenny to end off the session.
All right, thanks, Clemens. I got actually one question. So, in this, or maybe for the benefit of the partners, how do you actually raise a credit note in the Xero?
Good question, Lenny. Let's go to the business side to show you guys this. Okay, so let's do the whole run through from start to end in this case. So let's say I have a new bill that is non-trade. I'll start off with creating a new bill. Okay, so let's say I have a rental company here. Okay, let me just create a generic name here. Okay, due date, I'll just do due date today. Okay, then let's say this is a rental expense. Okay, let's do it this way. So this invoice pertains to a non-trade, an expense, so I'll account for it in rental here. Okay, so if you recall back to my Excel sheet just now, let me just jump back. So what I'm doing here, right, is debiting my rent expense already. Okay, I didn't list it here in my list, but you get the point. So I'm debiting rental expense here. My credit has been fixed in the Xero AP module already. Okay, so I'm not doing any second entry for accounts payable in this regard. Okay, so I'm raising this. Okay, now for the reference side, I would normally recommend to just indicate non-trade so that you can hunt out all of these transactions in your account transactions report within Xero later on. Okay, let me just approve this. So we have effectively done debit rental expense and credit accounts payable, which is not exactly right. So now we want to pass the other side of things to throw it into our non-trade creditors. So within this bill itself, under bill options, which I'm hovering over now, you can drop down this list and you can add a credit note directly to this invoice. So let me add the credit note. Okay, now when you're doing this credit note, this is where you choose the other side. So I want to pass this entry into my non-trade creditors now. So back to here. Now this accounts payable is fixed. What am I crediting? So this is where I pass the other side of the entry into my non-trade creditors. Okay, in this case, I highlighted accounts payable. So let's say non-trade creditors, just to illustrate. So let me jump back in. Okay, so let me look for non-trade creditors. If it's not, okay, it's here, so I'll choose it. Okay, so now this is the final piece of the puzzle. I click on approve. Okay, make sure the totals match 5,000. Okay, approve. Okay, now what you've done is exactly what we illustrated in the Excel sheet. So you have passed the credit side into non-trade creditors, and this will be your final displayed amount in your trial balance. So that is how you account for non-trade creditors in your year-end balances when you're doing your accounting for your clients every year. Okay, now just to go back to trial balance to finish off this demonstration. So I'll go to TB here. So I've already passed 2 entries, right? So you should see account a few times already. But essentially, yes, my non-trade creditors, they have been properly accounted for because we don't want everything to be thrown into accounts payable. Okay, if you have GST, of course, you notice here 350. So you have to make sure that you apportion out whatever amounts that is correct into your non-trade and trade payables. Okay, back to you, Lenny.
All right, thanks so much, Clemens, and hope this helps you guys. So with that, we will cut short the video and look forward to having more sessions in future. All right, thanks, guys. Let me just stop the recording.